Hans Vrensen. You are Managing Director and Head of Research and Strategy Europe at AEW. Thank you for joining us on BiTV.
Luc, it's my pleasure. Thanks for having me.
It's a pleasure to have you back on BiTV. Even more so that AEW recently published its 2023 mid-year European outlook entitled Light at the End of the Tunnel, in which you share a cautious optimism, shall we say, on the European macroeconomic outlook. After falling investment volumes and much uncertainty, are European real estate markets starting their path towards stabilization and recovery?
Yes. Well, the short answer is yes. There's a couple of reasons why we think that. So first of all, inflation is starting to come down, perhaps a little bit more slowly than the central banks want, but the bond markets are already pricing in a decline of inflation. So we see bond yields starting to normalize, and long-term bonds are projected to come down. That has actually led us to reduce our property yields in the latter part of the forecast period. So we are, the theme for the outlook is, of course, light at the end of the tunnel. We are still in the tunnel. And so that is a little bit tricky because we are not quite out of it yet, but we can see the end of that property yield widening in the latter part of the forecast. On top of that, we have been able to avoid recession. And I think most macroeconomic forecasters will project a relatively stable recovery. Obviously, that is assuming that there's no further crisis, but it's still a remarkable achievement, especially with the Ukraine war still going on. And that means that our rental growth forecasts have been uplifted. They're still not spectacular, but they are uplifted from last year. And those two elements, the property yields sort of coming down in the medium term and rental growth actually improving, those two elements have led to our view. And also the repricing in 2022 has been a little bit faster than expected across Europe. Now, France sort of stands out a little bit. We can talk about that maybe a bit later.
Okay, yeah, because speaking of yields moving out and repricing, your report in your report you state that prime yields moved out more than expected in 2022 across all sectors. So therefore, that's the question I wanted to ask you. What are your projections in terms of repricing for the coming months? Obviously in Europe and in France, because Businessimo is a Paris-based media.
Yeah, no, of course, and we have many French clients, and so we're very focused on the French market. I think the key thing that we're highlighting really in our yield forecast is that if we look at what happened in 2022 and already in the first quarter of 23, there are quite big differences between the individual countries, and especially UK has been sort of a leader in the repricing. Across the French and European markets, we saw yield widening of about 70 basis points last year across all sectors. Now, of course, there are quite big differences between the sectors. We expect a further 30 basis points for the rest of the year. So that means that actually, already the majority of the yield widening is behind us. France has been a little bit slower in this trend, and the yield widening that we see in the first quarter was a little bit more than elsewhere in Europe. So that means that France is catching up. Of course, this is based on the CBRE data that we use and the forecast that we put together. But I will say the timing of a reversion in the cycle, right, is very difficult to time. There are different data points that you can look at. We also, for example, consider transaction data. That is a lot more different, and you can see a few more outliers there. But in general, we think that for the rest of 2023, a further 30 basis points is what we put in, that we have from our forecast at the moment.
Okay, I have to talk also about financing. We are still in the tunnel at the moment. Financing is in the mind of every investor because in updating a study from January, your report estimates that the debt funding gap in Europe stands at 51 billion euros for the next 3 years. How could financing issues impact European investors and therefore the commercial real estate markets going forward?
Yeah, I mean, before we go into the impact, I will say maybe to put the debt funding gap into a more historical context. We did a comparison with the 51 billion versus what happened in the global financial crisis. The current problem that we have measured is roughly about 60% of what we had back then. So we have a much smaller problem this time around than what we had. Also, I will say one other mitigating factor is that banks have built up much better reserves to absorb some of these issues compared to GFC. But we still have a problem. It's maybe not as big, maybe it's going to be easier to deal with. It's also more urgent because interest rates have gone up much quicker and much steeper than in post-GFC. In GFC, there was a lot of loan extensions, and that was possible because interest rates were trending down. And that was a very convenient feature of the market because as a lender, you could basically extend the loan and not make a lot of other restructurings. That is very, very difficult in the current market because interest rates have gone steeply up from a very, very low base. And that is making it so that we need a lot more work on the restructurings. And that is really the key component. What the key impact of the debt funding gap is, that investors and lenders need to really sort out some of the legacy issues that are pertaining to loans that they put in place 4 or 5 years ago and that are now coming to maturity. That will require sometimes an injection of equity. It might require an injection of new equity if the existing equity is unable to do it. Perhaps a junior loan or other loans could also be inserted in the capital stack. If we look across the property types, one sector stands really out as being the most impacted, and that's retail. That's true for the UK, but also definitely for France as well. So we've quantified this, and about 40% of the loans that were originated that are secured by French retail assets will find it difficult to get refinancing. And that's quite a high percentage. It's in line with the other countries, by the way, so France doesn't necessarily stand out as such, but that is the key sector to focus on. It has the highest euro-denominated debt funding gap. Although, if I talk about the other sectors, there are still some issues to deal with, even though they're much lower euro amounts, but from a percentage of the loans that were originated back in 2018, 19, and 20, we are seeing that, for example, in residential, and this is obviously multifamily residential. I know that the home mortgage market is quite well protected because of the structural features in the market, but also offices. So multifamily residential and offices in France, there will also be some workouts that are going to be required. But in general, all of these problems can be resolved because there is sufficient capital to deal with it. It just requires some very deliberate restructurings.
And does that mean also that maybe we could see new products brought to the market because of, shall we say, sellers being forced to sell assets to deal with their financing problems?
Yeah, I would think that there would be more value add or even distressed fund opportunities where people are going to be looking at either offering JV capital. We have already seen some distress. Well, I would say highly motivated selling if we want to avoid the word distress. For some of the public REITs, for example, some of them have already, and in fact, CoStar has been reporting on that quite nicely, some of your colleagues across Europe. We are seeing already some highly motivated selling where some parts of portfolios are being sold off. And that is an element in the market that we will see where people will be forced to sell to achieve the deleveraging either on a corporate level or on an individual asset level. So yes, there will be opportunities for investors to look at, probably it's more of a value add situation, because you do need to restructure things. And many cases, the existing equity investor might have not invested a lot of money in the properties over the last couple of years, because they didn't have that many, they didn't have a lot of skin in the game, as they say, and that could be a reason why there will be some very attractive opportunities coming up.
Great. Thank you very much, Hans Vrensen, for this very valuable insight. It's always a pleasure to have you as a guest on BiTV. Thank you all also for being with us. We'll see you soon on BiTV.
Thank you, Luc. Take care.